So good evening. Wonderful to be here and wonderful to be in conversation with Dave McClure of 500 Startups. So let's get right in, Dave.
Sure.
About 50 odd investments in India
Yes.
since you started investing here a few years ago. What would you say is the thesis or the theme that binds these 50 startups together, if there is one?
Well, I think we've been pretty broad about the areas we've been focusing on investing in. The unifying theme is really just smart people. I wouldn't say there's any lack of talent in India, and there's certainly no lack of opportunity. Both globally and domestically, particularly in the last few years, I think we've seen an explosion of opportunities across many, many different sectors.
All right. Tell us a little bit about the 500 startup philosophy with which you started up this seed VC fund, also
Yes.
accelerator, and how much of that model, if at all, you've had to tweak or customize for a market like India?
Yeah, I think we got started about 6 years ago with an intent to obviously make a lot of investments. The name itself is pretty straightforward in
Yeah.
that. We used to joke that that seemed like a crazy number when we were getting started, and now we've actually done over 1,500 investments, and people keep asking us when we're going to change the name. But the basic idea is really that startup success happens infrequently. That really a lot of startups end up failing, unfortunately. A few of them succeed, and probably a small number really succeed quite wildly. But we see that happening at a very small percentage of deals. In our experience overall, probably anywhere from 50 to 80% of our investments probably go to zero. We might get lucky and get an exit from maybe 20 to 30%.
All right.
And we think we'll see a very large exit, maybe from 5%, possibly up to 10%.
All right.
But what's clear about that is if we make a large number of investments, we have a much better shot of getting those large outcomes. And it's really pretty straightforward based on that sort of basic principle. But beyond that, we think there's really a lot of opportunity to help startups and particularly tech-focused founders learn more about sales and marketing and how to do online marketing and growth. And that's really been a large focus for the company as well.
All right. When we talk about exits, and I've read this somewhere that you've said that you're at least another 4 to 5 years away from, kind of seeing some major exits out of your portfolio. Given that your timelines are long,
Yes.
has it been a challenge for you to raise your funds? I know you closed a $85 million fund a couple of months ago. You're looking to raise another one. What has been the challenge? What are typically the questions you get asked, and what are the answers that you have?
Well, I think there's a lot of challenges just because what we do is so different from the rest of the market. We invest in hundreds of companies. We do it globally. We run an accelerator as well as seed program. For at least a lot of traditional venture funds, that looks very, very different.
Yes.
We have been successful in raising over $200 million over the last few years, so I wouldn't say it's been impossible, just maybe a little bit longer road than for traditional firms. But we've had interest from people who are in global environments. I think most of our last fund was actually raised from international investors,
Right.
primarily in Asia and the Middle East. And I think our results have been quite good. All three of our main funds look like they're operating at around 20% net IRR. That's still mostly on a markup basis, but we have seen a bunch of exits, and probably at least 6 so far that are in the 100 million plus range.
All right. As far as India is concerned, there was talk of, a dedicated fund
Yes.
for India. There have been some positive movements in that. You've alluded to the atmosphere here becoming more positive. Are we likely to see announcements around this soon? And what changed
Yes.
for you? What changed for you?
Well, I think we looked at first doing a fund in India about 3 years ago, and the market environment was a lot more negative at the time. There was quite a bit of challenges, I think, in raising capital for that type of effort, even though we had been successful in investing in companies that were having success. I think since those 3 years have passed, a number of things have really changed quite considerably. The Modi government coming in has really had a much more business-focused approach. A lot of companies in the market have had success raising capital at later stages. You've had very large companies like SoftBank and Alibaba and others come into the market, which I think provides a lot more confidence for earlier stage investors when they see there's downstream investors writing checks. So I think very, very soon, hopefully in not too many more weeks or so, we'll have a pretty big announcement about what we're going to be doing in India. We've been investing maybe about 10 to 15 companies a year. Last year, about 24.
24, yes.
But I think there's easily a lot more that we can be doing. So I expect that we'll be doing at least 30 to 50 companies a year in India, and possibly even more than that going forward.
All right. You brought up SoftBank and some of the bigger strategics, and I'm going to then ask you what happens when, someone like a Nikesh Arora writes huge checks to companies that are relatively early stage. What implications does that have for programs like yours? I mean, how do you read the market? And I know you asked Nikesh some pretty candid questions at the NASSCOM Product Conclave last year. So, yeah, your thoughts?
Well, I think the types of checks that they're writing, $50, $100 million and more, sets very large expectations for execution. Those companies haven't won the battle just because they raise that money. They still need to invest and grow the business and get a return for their investors. So I think when someone raises a $50 or $100 million, we usually say congratulations, but you might actually want to say, I'm sorry or condolences, because they have 5 years of really hard work in front of them. But at the same time, I think, it's encouraging, compared to maybe 3-4 years ago when we were investing in India and there wasn't many downstream investors or there wasn't much activity going on. There's a lot of concerns whether we were going to be able to see those companies that we invest in survive to the next stage. I think now, they still face the test of execution, they still face the test of competition, but there's a lot more enthusiasm for the Indian market opportunity, and I think good companies are going to be able to find money. So that's a good thing generally. I think we're very optimistic that having investors like Nikesh and like others is a generally good thing for the market.
All right. Let's talk a little bit about the environment, the macro environment, what we've seen, what started off with the rout in China and the public markets there,
yes.
What that has meant for companies that, raised big A rounds and B rounds and are finding it now difficult to raise their follow-on rounds. And, where do you stand on how VCs are approaching this, what startups are doing, frankly, because it's becoming difficult for startups to raise money. They've gotten used to, burning cash in a certain way for certain things. Tell us about what you think. You had a pretty candid blog on this some time back.
Yeah. Well, I think there's always going to be ups and downs in the market. I think there's a lot of companies that raised money at generous valuations over the last couple of years. You've certainly seen a lot of gyrations in the US market and the Chinese market, but particularly I think in the later stage US private market, multiples on investment have probably come down quite a lot in just the last few months. And you see it somewhat in the public market with stocks like LinkedIn as well. So I think for a period of time you had a lot of late stage investors from the public markets wanting to get into venture. You had international investors wanting to get into venture. So there's a lot of competition for the unicorn valuation, unicorn investments, and people were being very generous about those multiples. Fast forward now, I think people have woken up to realize that there is risk in that part of the market. Not every unicorn company is going to make money, and those multiples have come back down. And I think that's going to make it very challenging for a lot of companies that have a high burn or raised around and maybe haven't made as much progress to raise capital going forward. There's going to be some challenges. I think some companies probably will either have to raise money on much lower valuations, possibly down rounds. Some companies will probably go away as a result of that too. But I don't think it's a complete, 2000, 2001 type of scenario. I don't even think it's the 2008, 9 scenario. I think it's really just valuations coming down and people looking for value when they're investing. So, like I said before, good companies I think will be able to raise money, even though they might have to work at the valuation to get there. Companies without, positive unit economics that are maybe spending too much are going to have, some challenges, and that's going to weave its way into the rest of the market.
All right. When did you see this coming, and what was the kind of notice, if at all, you put out to companies in your portfolio, not just in India, but in other emerging markets as well?
Well, I don't think we are generally focused on Series B and C sort of stories. Most of our investments are happening at Accelerator and Seed and maybe Series A. For our companies, really, they're just trying to find how to grow. They're trying to figure out product market fit, get their first $1 million in revenue. So I don't think that story really is that much different, just that it's going to be tougher and valuations will be lower. But for Series B companies, Series C companies, I think there's substantial evaluations they're going to have to make and what their burn rate is, figuring out whether they have enough runway to get to the next round. I think maybe even looking at the fundamental business itself and figuring out whether they want to be competing at negative cash flow sort of businesses. So that's going to have an impact on capital intensive businesses, particularly e-commerce businesses that maybe are not operating with the most generous of margins.
All right, so let's talk about some of your portfolio companies in India. What has been couple of areas in India that you find of interest? I know we were talking earlier and you said that the market in India is large enough, so you're not really looking at Indian startups going global. That's not really your theme here. So tell us a little bit about the kind of startups that you're focusing on, and maybe you want to talk us through a couple of interesting ones in your portfolio right now.
I mean, I think the first couple of years when we were investing in India, we were a little bit cautious about the domestic market opportunities, not because we didn't think they were there, but because, again, we had to look at other downstream capital availability. So a lot of our investments were mostly looking at global stories that could come to the US, and in particular, a lot of SaaS companies.
Right.
I think in the last few years now, we are looking not just at those businesses, but SaaS companies that might take off in India, e-commerce that's in India, education and healthcare. In particular, fintech and financial services, I think India is a huge market opportunity for that. Companies that we've had some success with, I think we've had a few smaller exits that are pretty decent. ZipDial in particular was a great story. Yeah. Some of the companies that I think we're optimistic out right now, Culture Alley is a company that started with more of a focus on the global market, and it's turned out that really English for a variety of domestic Indian markets, particularly a lot of local language markets in India, has been where they've grown substantially. A company that came to the US, SourceEasy, is really taking textiles as a platform and making that available via API to other retail and fashion companies. And then an ad tech company called Silverpush that's also been doing really great and over $5 million in revenue and continues to grow. Yeah. So we're pretty happy with the overall portfolio. I think we're seeing both B2C and B2B stories that go great. We're seeing both domestic India and US stories that go great.
All right.
And frankly, I'm just really happy that a lot of people have woken up to realize how big the Indian market opportunity is, and that there's not as much. I think there's been a lot of people talking about the difference in quality between entrepreneurs in India and the US, and I just really feel that's a false story. I think there's a lot of talented people here, and that's becoming more obvious every day.
All right. You actually preempted my next question, because I was going to ask you that a core of what 500 Startups does is also provide an accelerator program where you work closely with startups to help them with their product market fit, marketing, pushing their product out and all of that. The kind of allied services that they might not necessarily have mentorship easily available to them. Given that, what are some of the deficits that you see in terms of a certain kind of talent being available, especially for product companies?
Yeah, I don't see that there's really too much deficit at all. In fact, I think the pay scales here in India have been rising up. The talent level's been rising up. I think you see really world-class entrepreneurs coming out of India. So that's not too much of a concern before. You just have a very huge and educated population that's got now starting to have levels of experience from working at different countries, working at different companies here that have been around for 10, 15 years now. So I don't think there's as much criticism, and I think there's, again, more confidence. The main thing that we've always said is that the primary difference between entrepreneurs in Silicon Valley and other places around the world is just an extreme level of confidence, and that is probably harder in other parts of the world to get, but most of the time, after a few years, that happens too.
All right. So I'm going to kind of wind this up, and I can't let you go without talking about a statement that you made. I want to tie this in with a bigger global debate around net neutrality and India and Facebook. So you've said that Instagram, Facebook videos, Pinterest, YouTube, Snapchat, all of these provide a good platform for distribution. And you are actually bullish on this space and looking at startups that feed into this. Where do you stand on this thesis, and then when you saw what was happening with Facebook and the Free Basics program in India, what's your stand?
Well, I think there's been a lot of arguments about whether that Free Basics is a good thing or a bad thing. Facebook's a very aggressive company, and they want to try and get products out to market as soon as possible. But at the same time, I think there's a really developing ecosystem in India that deserves the opportunity to grow itself, and I think maybe having just one option or one set of options isn't going to be the most beneficial choice, even if it takes maybe a little bit longer to figure out how to make that a level playing field. I think there are going to be opportunities for Indian companies and Indian products and services to be in that mix. So I think that's important. Maybe there's a few folks in the US who don't understand kind of what that option or opportunities can present, but I do think that's really important. I think that you can't just have a country where everyone's consuming products that are coming from the US. Those products have to be global in nature, and they have to have an opportunity to be built everywhere around the world. Otherwise, it's not going to be a fair shake for everybody.
All right. For startups that are looking to feed into these sort of delivery platforms, the Facebooks, the Snapchats.
Primarily around, I think, but visual platforms, so pictures, videos, and eventually virtual reality and augmented reality.
All right.
So I think those are great opportunities to sell other products, to have customers experience what's going on, and I think we're just at the tip of the iceberg in terms of how visual platforms are going to be able to present products and services to customers. In particular, I think looking at products like Instagram and Snapchat and other video-based platforms, just going to explode over the next few years. I don't think you'll see any type of e-commerce or other type of business that's conducted without having visual platforms be pushing those products in the near future.
All right. What you're seeing in India compared to other emerging markets that you're now actively playing in, what are some of the similarities and differences?
Well, I think right now Southeast Asia is probably the largest opportunity that we've been seeing outside the US, where we see a fully developed ecosystem, and there's lots of investors playing in that world. There's local investors, there's investors from Japan and China and Korea as well. There's European and US investors. I think India is probably the second biggest opportunity after that, that's also starting to fill in now. Still a little bit, maybe controversial at times, but I think you're going to see a lot of other international investors, not just Indian investors, in that market. And it's the future. I think after that, people are starting to look at Africa and Latin America as the next wave of markets. But right now, I see that there's just going to be a huge amount of opportunity in Southeast Asia and India for us, and we're going to really double down on both of those over the next 5 years. All
right. Do you have a target as to the number of startups you're looking to invest in India over the next couple of years?
I'd say we'll be at least doing 30 to 50 companies a year. I think that's easy to pull off. There's probably opportunity for us to do 100 a year if we have the number of people on the ground to take advantage of it. So we're really going to push the pedal forward on the number of investments we're doing this year.
All right. Are you building out your India team as well to kind of sustain all of this?
Well, I just think, again, there's huge opportunities in very basic sets of products and services that haven't been built out yet. In particular, I think financial services, fintech, education technology, and then healthcare and services are just really big opportunities for a country as large as India. And I don't think we've even touched the opportunities there yet. Looking at ways to combine lending algorithms to consumers and small business, really build out the financial ecosystem for consumers and small business all throughout the country.
All right. Okay. Thank you, Dave. Thank you very much for this session. I'm not sure if we can open this up for an audience Q&A. Can we? It would be interesting if we could. No? All right. No, can't do that on this one. But nonetheless, thank you very much. Thank you, Dave.
Thank you very much.
Yeah.